So, what do you need to do to retire early and live that fire lifestyle? Well, that's what we're going to talk about in today's video. So, stick around, it should be really good. Hello, my YouTube friends. My name is Adam Kahn, and this is Investing with Adam K. So, what does it take to retire early, and what do you need to do? I've been watching and researching a lot of these videos on these yield max funds that really pay higher dividends and going into depth as to how they work and telling you guys what I think about them. I also saw one like I love Ari Gutman. He does great interviews and was watching, I think it was an old one about a guy who's been using those, talking about how everybody's so negative on them, but he gets good return and they work. I was also watching another one where a guy's got a huge spreadsheet. He rotates out of them. He's done a huge analysis of which ones don't have a huge NAV erosion, which ones pay outright, and he worked his way down. He had well over 100 tickers, I think he said at one point, and he's now narrowed it down to the top 50 where he'll get out of one, not get out, but what he does is he takes that dividend payment and rolls it into the next one, and he's done really well. And what I'll say is I think these things suck, and I don't really think it's a great idea for people who want to retire, whether that's early or late in life, because I think they're going to run into some big issues unless they're like that second guy who's really done his research, has it down to a science as to which ones don't get a huge NAV erosion and how they actually run their funds and have some real value and work well. Now, I'm also going to apologize for the hair and everything else. I'm trying to enjoy the day. I'm watching the markets and getting to sit out in the yard, and I can work from out here, which is super cool. And I think that's how you retire early, if I were really straightforward, is find something you enjoy so you don't feel stressed at work or over pushed at it. And especially if you can work off of a phone or from a computer and really manage your time well to balance between getting your own stuff and work done, that becomes the way I think of retiring. And part of why I do YouTube is nobody wants to do nothing. Like, you want to keep your brain active, you want to have stuff to do. I do this stuff because it gives me something I enjoy doing. I get to talk out my ideas with you guys, and I feel like I am retired. Now, if I had to live off of what I make of YouTube, I think last month I made under $10, so probably difficult to get by on that. And the real way to retire early, in my humble opinion, is put away and save as much as possible as quickly as possible. Because you don't have the same expenses when you're young. Like, I think back to when I first graduated school and I went out and got a job. I lived in a studio apartment in Chicago, and it was in a safe area, but that was my main expense. I didn't even have a cell phone, but they didn't really have them back then, so I don't want to overstate that because I'm sure I had a phone at the apartment. But my expenses were eating, the apartment. I didn't have a car, so maybe some cabs here and there, but for the most part, I could walk anywhere and take the bus. Like, I kept things as low as possible, and it wasn't really on purpose, and it didn't feel like I was missing anything. I got to tell you, after college, I was so proud of myself to be able to have my own apartment and be able to pay it with the pay that I was getting and everything else. Like, I was proud of that little apartment, and I didn't think of keeping my expenses low. I was just saving and saving and saving. Now, as my income increased, I just stayed in that position and continued to do that. Once I became a trader, I bought my first place, but it was such a little expense in terms of the income I was making. I was still able to save and save and save. Then you use that money and you invest it, and you can invest it in all sorts of things. I think when you're young is the best time to take shots on things that may grow at a rapid pace. But right, perfect timing. You need to do your own research. As always, this is not financial advice. Please don't listen to me. I'm probably the biggest idiot on YouTube, so you definitely don't want to listen to me. And you really shouldn't listen to anybody on YouTube. You need to do your own research and decide what fits your investment objectives and what fits your personality. Because while I think that at a young age that's the best time to take shots, if you're a conservative person and that's uncomfortable for you, you shouldn't be taking shots just because they tell you to and you're young. I only say that because you have a long time horizon where you can make up losses if you have some losses along the way. And some of those things may really pay off if you let them, season and grow and mature the way you hope. Once you get old like me, you just don't have the time horizon. So I help my son invest a lot differently than what I look for me and my wife. He likes Spotify. I think that's great for him. And if Spotify has some huge correction, he's 14 years old. By the time he's 40, it's had plenty of time to recover. And if he and his friends are using it, I think over the next 30 years, it probably does great. At the same time, me being an old fuddy duddy and not having the same time horizon, if it has a huge correction, maybe I don't have enough time for it to come back the way it probably does. Now, I hope I do. I hope I last like 100 years, and I don't mean that the wrong way because love my wife, love my son. We're very fortunate, and I like the way we get to live. But I have to be realistic too about my age and what my goals are and my ability to be able to continue to work. And when that all comes into play, I don't want to take the risks that I would have when I was 20 years old. Now, I would also recommend if your goal is to retire young and retire early and live that fire lifestyle like everybody talks about, also plan out what your goal is with your life as you get older, because do you picture it being just you? And if you're saving to the point where you have enough for just you, but you actually want to get married and have kids and do other things, I think you have to take that into account and make sure that there's enough coming in to be able to support those things. Because otherwise, what happens is you'll run into a position where you feel like you have enough for you, and you won't have a relationship with the person that you're getting with that is combined as the two of you where you're supporting each other. And if it's like, well, too bad, I already did what I needed to and I'm on my fire lifestyle, I don't know that it'll coincide so well with somebody who's hoping to grow a family. So really think it through how much you need, what your plan is, and also you have to account for inflation, which I'm sure everybody's learned about the past few years. But to be fair, prior to COVID, we probably had 20 years of no inflation. So a lot of people who are younger and may not have seen inflation until recently and think that this is something that's just short term that'll go away, I would account for 3% inflation probably for the next 10 or 20 years. I mean, typically inflation is what you should expect. My real analysis of what we've gone through, and forgive me a bit because I've thought about this a lot, I think the internet really impeded on inflation. It made companies more and more competitive to where they could shrink those margins down and have less profits because they were able to get more efficient at what they were doing. They were able to search for products the same way you and I could and find things at better and better prices to be able to use them and resell them and still be profitable, which allowed us to live in a society where you didn't see a whole lot of inflation for a while. Well, it probably got to a point that the margins were just too small. I'm guessing it all came to a head around COVID and just random timing, because I remember having conversations with my brother and friends about some things that were just so inexpensive. I couldn't even understand how the companies could be profitable. And if I were to guess, they probably weren't. Once COVID came around, they were able to move through all that inventory, reprice things the way they really should be. And since the internet was already around and mature, it reset itself to where now they have to actually have margins and have profits. And things do go up in cost. So they were always dealing with the inflation, but the internet made the ability to be more competitive, find things in different countries, keep prices low to allow things to be sold for cheaper and cheaper. Eventually, as it came to a head and COVID came around, now they're restructuring because everybody's able to buy and find things on the internet. And there's the natural progression of inflation because things go up, salaries go up, the cost of oil and gas and life and materials tend to go up in costs. And now that you've gotten to the point that the internet has made you as efficient as you can be and you've reset that bottom tier, you're going to have natural inflation going forward. That's my analysis of really what happened. And I know that first movement was a jolt to the system, but I think that's just the way things happen. And everybody who yells at the Fed and thinks that they did this or they relate to the party, I don't think they have as much control as you think, especially from their maneuvering of short-term interest rates. I do think that quantitative easing and quantitative tightening actually does control it, but that's actually forcing it. And also why I think people are going to be really surprised when the Fed starts cutting rates, that you're probably not going to see mortgage rates drop a ton. I have seen inventory come to the market if we want to talk about real estate a bit. So I think we could see prices soften a bit. But I really think as the Fed cuts rate, mortgages are going to hold where they are because I think a 6 or 7 or even an 8% mortgage rate is not out of the world or nothing that's unrealistic. Like if I were going to lend somebody money for 30 years, I don't think I'd be happy getting a 3% return on that investment, even if it's secured by a house and everything else, because the return kind of sucks. I think the banks don't think that way. They really just think in terms of if the overnight lending window costs this and the bonds are running at that, and I buy it here and sell it there. Like they're so focused on the short term, they don't open their eyes to see the bigger picture. And it's not a slight on them. I think that's how they work, and and they work on small margins, and they're constantly buying and selling and giving somebody a mortgage and then selling it on the open market. But at some point, the end user is going to want to get an actual return that makes sense as opposed to too little over 30 years. So I think they cut rates. I think the rates for the mortgages stay about where they are. And you see that yield curve continue to look more normal. Now, feel free to go back to my videos from probably a year ago or so when I first started talking about this, and even when the curve was uninverted. And everybody just thought, oh, once that's going to cause a recession and we're just going to see these other things. And I had a different viewpoint that no, when the Fed reverses and they start cutting rates, you'll just see the curve normalize because we won't have a huge recession and things will go back to normal. Like go watch. I find that it's patting myself on the back because it's done exactly what I envisioned. And the markets, I think we continue higher until there's a huge influx of overexcited, you can't lose type of mentality driving in. It doesn't make sense in some ways because I do feel like we are in a bit of a bubble, but I don't see it popping at this point. I see it continuing. Jobs are good, people are working, everybody's stretched. Like that is sort of a normal society and a normal economy. So if you want to retire early, save, put away, and then learn how to invest it where it can give you a reasonable return, possibly in dividends, or possibly you can manage how to sell a little bit as the markets go up. I think the best way is to adjust depending on how the markets are doing. If the markets do poorly some years, you probably have to take less out if you're trying to retire. And as the markets are doing well, maybe you're able to take a little bit more and do a little bit more things. But really analyze what you expect your life to be at time of retirement and prepare for all sorts of things that could change along the way. Whether that's a baby, you have to know if you want to own a car or if you're okay taking Ubers, and start to account for all of it. Health insurance goes up year in and year out, so you can't make the decision based on today's pricing for that. Or if you're moving out of the country or you're going somewhere else, you have to be careful of currency risk. So one of my friends from high school, who I still am friend, he's one of my best friends. He ended up moving to Paris. God, how he ended up doing that just amazes me. But he does like computer stuff, so he works online, and he was able to do that and found it really cool to go to Europe. Well, he started talking about how the past few months, how the currency has caught him way off guard because he used to get like 98 euro for every dollar or whatever it was, or 98 cents of euros. And now he's only getting like 81, and it's only been over a few months. And he's just like, this is crazy. It's really impacting my cost of living. Nobody ever thinks about that. They think that the currencies just stay where they are and it never changes. I talked about this in a previous video as well. The dollar has gotten so strong that Americans, like you see the YouTube videos, move here and live on $20 a year and move here and you live like a king for $50 a month. Or, obviously I'm exaggerating. But the reality is the dollar got so strong, people were moving to Thailand and Vietnam and all over Central and South America and all of these places with no recognition that sometimes that trend can go for 10, 20, maybe even 30 years, where currencies really trend a long time in the same direction. And if it reverses, whatever you were thinking I could live on, the currency exchange can really change and make a dramatic difference in what you can afford. All of a sudden, that 2,000 a month that you're living in Vietnam on, it's the same cost in terms of Vietnamese dong, but your dollar is getting you less Vietnamese dong and you never saw it coming. And it happens slowly and then it can happen quickly, especially if the governments intervene because the currencies have gone too far. And my personal opinion is the currencies have gone too far. The dollar has gotten too strong. I wasn't surprised to see the euro move. I've been a little surprised that the Japanese yen has stayed where it is, but maybe they're having different issues. And just for full disclosure, we really like Asia and we like Japan. I bought Japanese yen because of it. It seemed like we had gone far enough. And my attitude was, well, if the dollar gets stronger, okay, so I paid a little too much for the yen, but I'll be okay because over the next 10 years, we'll probably visit a few times and we'll use the money over that time. And if the dollar reverses and it goes where I think it's going to, I'm going to feel like we get these very inexpensive vacations because the dollar has gotten so strong against the yen. I, I could be wrong, but I'm guessing in 10 years you're not getting the same amount of yen as you are today for the dollars, and I think you'll probably get less. Now, it's a stupid trade. Currencies move very slowly. People who trade currencies are usually trading the futures market because of the leverage, and actually buying the currency takes so long. It's like a terrible trade. But I also know my son loves Japan, and as the dollar gets weaker, or if the dollar gets weaker, I'll get a little stubborn about going on vacation because it might be very expensive to visit there. Whereas if we already have the currency, well, I'll be okay because it is what it is. The point of all that currency discussion is if you're looking to retire early and you want to live that fire lifestyle, and part of it was, I can go to this country and live very inexpensively because this is how much I get for this many dollars per month, I would account for only being able to use half of that. Sorry about that. My stupid alarm thing went off and was distracting me. But I'd really account for only about half of what you expect. Like if you're living on 2,000 a month while you live in Vietnam, since I use that as an example, I would be prepared that it could end up costing 4,000 a month if the currency changes. Again, it won't happen overnight, but you'll slowly feel more and more squeezed over the years as it changes because they're going to have their own inflation on top of it. And that probably won't be out of control, but it could be. Forgive me, in an Asian country, sometimes it can be. Well, in any country, I shouldn't be specific to Asia. The reality is, lots of countries have had that. But let's just say they have normal inflation at the same time that the currency moves, you'll get a double whammy. You'll be seeing the normal, let's say your rent is X thousand dong per month, and it's slowly going up at 4 or 5% every year. And then on top of it, your dollar starts getting weaker, and you're losing the amount of dong that you're able to get each month or however you're converting it. So if your plan is to live the fire lifestyle in another country, either make sure that your income is coming in their currency, and I don't mean converted from US dollars, or prepare for currency risk and don't just leap over there without recognizing that you have a whole lot of things affecting your affordability when you move somewhere else. And if you're thinking of doing it in the US, understand inflation, understand the things you're going to need as you get older. And I really encourage it because I love being in control of my destiny, in control of my destiny. And I don't mean like, we don't have total control of anything, but meaning I can take my time to find a job that I'm good with. And I don't mean that I'm talented at, but that I like and that I don't mind doing. because we have that cushion to be able to afford 3 or 6 months of waiting until you find what you want, and not be super stressed that, oh my God, what am I going to do? I need to find something yesterday because I can't pay the rent tomorrow. So do yourself a favor, save and save and save, and do the best for retirement. Now, before I get to the end, my favorite trade right now is Intel. Why? Especially because of the comments I get when I made comments when people talk about Intel. Oh, they make the worst chips, they're losing money. Like, I'm hearing all the same stuff. And I don't disagree. But the US government just got a 10% stake in the equities. They own 10% of Intel, and they are not an active partner, so they're not going to get their hands in the mess. They're not going to go there and start trying to run it. But what they are going to do is they're going to make sure that they're successful. If a contract comes up for new computers, what type of processor do you think is going to be in it if it's something that's purchased for the government? And on top of it, do you think that maybe Trump is going to say we're going to have to use Intel for national security because we own part of it to do this new project or whatever it is that they aim for? Hell yeah, of course they're going to. And they're going to push those earnings so that he can say in 2 years how good a job he did with investing in Intel. And oh God, look at how many millions of dollars we made for the taxpayer. Now, the taxpayer may have paid triple that amount to pay for those contracts to push the stock price up, but he won't need to tell that or explain that in depth. He'll just be able to say, we got in when the stock was trading about $20 a share, and whoa, look at it now, it's $60. So we can use that money to pay off the debt or whatever we need to do as we sell half of our stake in Intel, or we have to hold it because for national security or whatever they decide at that time. And before you get annoyed about how crooked they are and everything else, I don't really disagree. But instead of getting mad at it, just recognize it for what it is and follow the money and jump on the trade. There's nothing, we don't have control of it. There's nothing we can do. You can shake your head and get angry and look back in time and say, I knew they would do that, and use it as another reason to blame the politicians, complain about your boss or whatever else. Or you can just use the information the best way you can use the information too. Now, just like I said in the beginning, this is not financial advice. I might be completely wrong, and you might see Intel tank. And it's funny to me that I'm buying a company that I don't even think the company is a great company, because I did a video a while back when I talked about bad news on good companies. And I used Intel as an example of one I wouldn't be buying into because I just saw the bad news as bad news. I try to look for bad news on good companies to look for the things that I invest in. Intel has a great name, but I saw them as getting outdated and not being competitive and losing market share. And I did not see all the bad news as being a good opportunity. I still feel that way, but I don't see how you don't jump on board with the government when you have their money behind you. I think it just is right in front of my face. Now, I'm doing it very small. I was watching, God, I need to get his name. I actually binged watched this guy I found recently. I thought his videos were great, and I like how he does his analysis. But I was listening to talk about something else. Generally, when I take a shot on a company like Intel that I feel like is a shot, I'm usually using about 1 or 1.5% of my overall portfolio. It's a really small percentage. And I also recognize that I might lose half of that, which, who wants to lose half of their investment? But if it's 1%, or let's call it 1.5%, you're only losing a tiny percentage of your overall investment. And if I get lucky, it might double or triple and become an amount of money that I'm actually really happy about. Doesn't mean I delve in and put 10% of my money in that. If I'm putting 10% or 5% into something, it's big and boring. It's the stuff I talk about. Like, that's when I'm buying Amazon or Google or Meta or Chevron and Starbucks, like companies that I just believe in and I think they're good companies. But they're not going to triple over a short amount of time. It'll take them years to double because they're already established and they do what they do. When I'm talking about the stocks that I think are like really could explode, whether it's hymns. Pun wasn't intended, but gotta tell you, that's kind of funny as soon as I said it. But like hymns or Sofi, which Sofi I think is a great company, but again, I'm not putting 5% of my investment portfolio into a company like Sofi. Those ones I'm making very small bets hoping to get big payoffs. And if I don't, if I make enough of them, that some of them will pay off. Intel fits into that category. So again, it's not financial advice. You need to do your own research, but please don't make in the comments, oh, I bought Intel, I put all my money in it, and it was your advice and it's done terrible. Because especially after the disclaimer and everything else, it is what it is. Be real careful out there. Go seek out a financial advisor and don't listen to any idiot on YouTube, especially me. Anyway, do me a favor if you haven't already, hit that subscribe button, smash the like button, make some comments. Feel free to tell me what an idiot I am. Enjoy your day, enjoy your week. I'm sure I'll do posting more. I might be all messy from now on because I'm going to continue to try to work from the yard. I'm going to spend time jumping in the pool because it gets hot and cool off and everything else. Really nice way to